Intro. Bitcoin is navigating a period of heightened uncertainty, and whether it can avoid a deeper bear market will hinge on a few clear, measurable dynamics. In this episode, we'll break down the three factors that matter most right now, the technical support level to watch, the effect of central bank liquidity, and how U.S. government cash flows can change market sentiment. Understanding these will help you read the market more clearly as events unfold. Holding above the 200-week EMA, the first and most immediate technical line in the sand is the 200-week exponential moving average. This long-term moving average has historically acted as a durable support level for Bitcoin through past bear markets. When price stays above it, investors read that as resilience. A decisive break below it tends to trigger deeper declines. Practically speaking, watch daily closes relative to that EMA and how quickly momentum reacts around it. Sustained support, there would be a strong signal that sellers are losing control, while a failure to hold could open the door to a broader downtrend. Federal Reserve, stealth QE, and liquidity. The second factor is central bank action, specifically what some call the Fed's stealth QE. Beyond formal rate decisions, the Fed can ease financial conditions by expanding its balance sheet or stepping into money markets with liquidity operations. More liquidity in the financial system can push investors toward risk assets and inflating asset prices. It can also stoke concern about currency dilution, which pushes some capital into alternatives like Bitcoin. The key here is to watch not just headlines about policy rates, but balance sheet activity, repo operations, and other liquidity tools that quietly feed markets. U.S. liquidity after the government shutdown. The third factor is U.S. fiscal and operational liquidity, especially in the aftermath of any government shutdown. A shutdown constrains cash flows, delays spending and tax processes, and reduces short-term market liquidity. Once government functions resume, that liquidity returns, payrolls, contract payments, and tax flows restart, and that renewed cash can translate into higher trading activity and demand for assets, including Bitcoin. The timing and scale of that liquidity return can uplift markets or at least stabilize them if other pressures aren't overwhelming. Conclusion. In short, Bitcoin's path away from a deeper bear market depends on a mix of technical resilience, central bank liquidity behavior, and the refill of U.S. market cash flows. Keep an eye on the 200-week EMA for the immediate technical picture. Watch balance sheet and liquidity signals from the Fed for macro pressure, and monitor the ripple effects of U.S. fiscal operations returning to normal. These three factors won't guarantee a bull market, but they will play a decisive role in preventing a prolonged dive. Stay observant as these forces play out.